Big camera day. Live chat. Waiting for the email. Turn that down. There we go. Do not disturb. I hate this. Okay. And then view your channel. There's 1229. Hit that thumbs up button. Nobody's joining. It's Friday. Back in Atlanta. Okay, we'll start on the scans. Scanner, market scanner. What? Oh, come on. We're going to log in. It might not have liked that I've been gone for so long. Oh, there we go. There we go. God, I love TrendSpider. How it's, ooh, KO. Is that a secondary one? Yeah. Morning, Chris. I think you can hear me. Let me see. Yeah. Okay, good. Let's see. Brokerage holdings. Okay, KO's the only one. Exactly. Exactly. Close it out right. Well, I mean, if you lost money this year, that's on you, man. I mean, come on. I don't care if you beat the indices. I don't care exactly what you did. But if you lost money, you're not meant to. I mean, just buy QQQ and take, 10% of your portfolio and trade that, because there's something in your system or your process that is not right. I'm seeing a bunch of people on Twitter. And for anybody that I haven't gotten back to, if you're seeing this or reading this or hearing this for the first time, let me go back to small cam. I don't know why I have a big cam on. But if you're hearing this or listening and I haven't gotten back to you, my apologies. I was in the car for 17 hours yesterday. BBY. Christian. Hey, I hope I didn't offend you yesterday, Christian, with the other day with the tin hat thing. I some of my best friends are tin hat people. We have a cross up on Best Buy, and I got to tell you, I wish I would have bought down here. Honest to God, I wish I would have bought it at 64. I don't think it's crazy to buy it at 78 with this bounce. My Christmas experience with Best Buy was so good, and I'll go over it. And I say tin hat lovingly, not as an insult. I like people who, like you said, read history books and understand history and question things. But I bought 2 new iPhones for my parents. They went from 7s to 14s. And Best Buy had a $50 off the 14, so I got them for, I think, $600 each, $619, $620, somewhere around there. I had to buy them in the same color, but they put cases on them. So I told them, I said, don't worry about the freaking color. But it was just the experience was so good. Morning, Mike. I'm now a fan. So, hooah, crossed up, hooah. K-Web. Okay, that's good for that. Let's go to the Dow. And I am going to go through today pretty quickly, just so you guys are aware. If you have anything that you want me to look at, just let me know, because I'll throw it in the podcast. But I've got a lot of social requests. It was 2 days, so like 7. And I put my parents on U.S. mobile service. I did not put them. So, full disclosure, I did not put them on my Visible service, and here's why. So, Visible is $25 for unlimited. My parents are 80 and 79, 81 and 79. And so they don't need unlimited service. So I got them a U.S. mobile service. And instead of choosing the Verizon network, I chose the T-Mobile network. And I got to tell you, I'm pretty impressed. Morning, Scott. Morning, John. Okay, we're going to look at, what did we just look at? We just looked at the NASDAQ. Okay, now we need the S&P. And yesterday, the drive back was tough. Dogs haven't really settled in yet. Do I care about Abbott Laboratories? Not really. AIG, it's run. AIG is probably going, finally after the 2008, we're getting back to the $80 level probably. I mean, this was one I traded back in, this was the housing crisis, and this was the major reinsurance company that the government had to bail out, which was trading for around $400 a share and was fairly valued at this price. Then you had the housing crisis, and this one just hasn't come back at all. Coin. I'll add coin into my list of stuff to talk about. We'll go back to the strategy tester here. I mean, coin goes with Mara. And my note on Mara is January 10th, the SEC has made a move, has to make a move on GBTC, the Bitcoin ETF. So expect on that date or before, I would expect it actually on that date, for a Bitcoin ETF to be announced. And that's all going to be held at Coin. So I would expect that one to be add Coin to your buy on this too. The only problem with Coin is the valuation. Look at that forward PE, 25,847. How are they going to make money off of an ETF that you can buy? I mean, they're going to custodian the Bitcoin. They're going to custodian all of that stuff. But how do they actually keep their retail business alive when boomers and others, money's going to probably be taken out of Bitcoin and more towards the ETF? That's what happened with mutual funds when ETFs came around. So, but that's just personal opinion. Nobody knows what's going to happen. Okay, so let me open up Let me look at these. See if there's any huge news here. I mean, the S&P is the only one that hasn't set a record. So, this is, I'm logged out here. So let's see what's free. I mean, you can see this stuff. Analysis. You can see the analysis. I mean, I'm not logged in here, so. Yeah, I mean, there's a shit. If you're in line for the ETF, I mean, buy. You can buy BlackRock. You can buy ARK. You can buy Fidelity. You can buy Coinbase. You can buy a number of these things that just you'll get. Okay, let's look at the news. Legal Zoom, Fusion, pre-market gainers. Wow, look at that. China SXT up 161%. China Green Agriculture. I used to trade this one too when I was in my day trade. Ooh, Fisker up 11% as deliveries grow. Bayou, Legal Zoom up 7%. I don't care too much about. Okay. Home. Let's open up our links here. We're going to open up that one. We're going to open up this one. And we're going to open up this one. And that's all I have to go over. Yeah, I missed out on a lot of the morning Sherry. I missed out on the a lot of the crypto run. I mean, I went over in the paid newsletter a few weeks ago, I think. I went over GBTC and how I sold out in December of last year. I sold out right about, I think, November. I think I sold here at the exact low. I mean, I listen. I'm out. Let's create the properties. Let's just go down a level in stroke, and we'll go down a level in font size. There we go. I'm out 320%. And that was a $50,000 position, and that's what, $200,000 now. So I'm out, a good amount. Okay, I would be right back. Dog needs to relax. Okay. Boom, 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 boom. What did I want to talk about? Boom. This is what I want to look at. Let's go to top stocks. This is a stock that, I mean, it's the top of their quant rating, and I thought it was interesting. I mean, this is, the chart's definitely interesting, reaching that double top area. GCT, I might buy a couple $1,000s worth of this to I mean, look at how good over 1 year, year to date. 10 year, it doesn't go back that long. I guess it was 2002. So you'd have not even a 5 year, not even a 3 year. But, ooh, I gotta sneeze. Excuse me. Bless me. Yeah. Okay, we're going to go. I'll move this after Kathy Wood stuff. Boom, boom, boom. I'm going to finish my coffee. It's decaf. Can you imagine me on caffeine? I mean, I drink decaf. I can't imagine how much energy I would have on caffeine. When I did semester at sea and I cruised around the world and we had 25-hour days, I did drink caffeinated coffee. But I was 23 at the time. I was a 21-year-old freshman in college. Most popular kid on campus. I went to school late. I decided to play drums and do drugs. After high school. So, okay. Let's see if there's anything on the homepage here. I did see nothing really on the huge buys there. Crude oil's up. Nat gas back down. Nat gas has been a sucker's trade. Okay, 9 o'clock. Boom. Let's go to QQQ. Okay, I'm going to hit record. I hope I don't start clicking. I don't think so because I'm using the Yeti mic. But if I start clicking, people just yell at me. Send the red button alert. Hit that thumbs up. Like and subscribe, bitches. I say that lovingly. Okay. It's funny because I cringe at the influencer crap. I'm just not good at that. Let's see. Pre-market. Nothing's really in the core portfolio. SMCI is back up at 292. Okay, hold on. It's folded. Here we go. Come on, Daisy. You want to go under there? Do I have to go get you another bed? No? Okay. Everybody's good? Dog did not eat her breakfast this morning, and we've had a little bit of the jelly bellies. So I get a little bit trigger happy. Uber is down at 1.57. I saw on the scroll last night that Uber was at 51 on CNBC. As I was just kind of looking over and scared the hell out of me. I was like, ooh, I didn't get out of that at 60? Because I am restricted from buying or from selling anything for today. So, okay. We're going to go QQQ. And I'll look at this. I have barely any notes, so a lot of what you're going to hear is winging it. So if I get stuff wrong, I get stuff wrong. Oh well, live with it. Good morning. It's Friday, December 29th, the last trading day of the year. And we're 0.13, I think, % away from an all-time S&P high. They're close to it. This article that I'm going to include in the newsletter from Seeking Alpha, NASDAQ, S&P, Dow experienced limited moves on the second to last trading day yesterday. Today's going to be the same. The one quote that I want to point out to you is this. One day before the last trading day of 2023, it seems market participants have gone home to prepare for New Year's Eve. The biggest takeaway on the day seems to be that the bond yields rose a bit, the dollar strengthened, and energy prices softened. I do not expect tomorrow to be any different as the NASDAQ 100 is about to close its best year since 1999. And you remember what happened in 2000. Investors aren't going to take a major risk or change any major positions. The books are pretty much closed. That's what you can expect today. So I won't go over kind of, hey, what can you do today for today? But let's look into 2024. 13 of 14 times after hitting the all-time highs, the markets were up 15% in the next year on average. So hitting new highs is super, super bullish. Here's QQQ. Let's take a look at a long term of QQQ because we are hitting those all-time highs that we hit back here in November 2021. You can see we're kind of moving past it. Every time we've hit all-time highs, we've continued higher. So it doesn't mean that you get out of the market when you hit all-time highs on the indices. It's not something that you necessarily worry about. In particular stocks, you can kind of try and trim. In indices like QQQ, VOO, it's a time to reflect on, do I trim some or do I just put more money to work? If you're dollar cost averaging, you put more money to work. What I'm going to include in the paid newsletter this weekend, and for anybody that doesn't know, the link is down below in the video. It's linktr.ee/daily stock pick. And to get the newsletter, it's the fourth one down here, the Daily Stock Pick newsletter. I do a newsletter every day that the market is open for free. The paid newsletter is the weekend newsletter. And the weekend newsletter includes some content that is educational, is more personal from my standpoint as to what I bought and sold. It is a significant kind of reach for me because I'm not used to doing that stuff. And the number one rule of this podcast, if you're listening for the first time, is do not trust a douche on the internet. I am that douche on the internet. I am not telling you to follow my trades. People have found this incredibly helpful to develop their own strategy. I include my setup on TrendSpider that you can use. Part 1 and Part 2. I'll probably include a Part 3. But again, the paid newsletter, you can get so much content from the free one. There's no reason not to subscribe. I am raising the price probably next year. Probably Monday, to $100, $120. I haven't decided, but $80 for the year just seems like a deal to me. So if you're interested, sign up today or over the weekend. You put your email in there. I do include a free 7-day trial. But this is the free one. And you can see I provide a ton of stuff. It includes all of the show notes, all of the podcast notes, stuff like that. But what I'm going to do in tomorrow's paid newsletter is my predictions for 2024 and some stocks that I really like in 2024. It'll be a little bit less of a strategy session and more of a, if you guys are boomers like me, the Karnak version, Johnny Carson Karnak. So that's what it's going to be like. Just so you're aware, Seeking Alpha, the tool that I use right here on, if you go over here to the second link, it says save $50, but you're actually saving more. There's a 30% off premium sale right now. It goes on until the end of the year, and that gets you all of the analysis. It gets you all the quant stocks. I will talk about this top stock and this top one that I found last night, just scrolling through the premium version. GCT, Giga Cloud Technology. You can see the quant rating is 4.99. Here's what, you don't get this with the premium membership, but you do get to look at these top quant stocks. This one's an additional $199. I don't particularly care. They have it for join $99 right now. But the one that I do like, the feature is the Seeking Alpha Premium. And you get that when you click on that link. It's for $169. You don't get these top-rated stocks. You don't get to follow this. It's just more of an analysis tool, and it allows you to analyze stocks, analyze your portfolio. You get your portfolio imported into Seeking Alpha. But if you're thinking about Seeking Alpha, that $169, I've been affiliate now for, 4 months with them. It has only come around on Black Friday, and they extended it because of the success of the sale. So if you're interested in Seeking Alpha and you're interested in saving, go to Linktree, click on that second link. I do think it's a great tool, this Seeking Alpha tool. If I wasn't an affiliate, I would absolutely buy it. That's how much I like it. Let's talk about some news that I found on Seeking Alpha. This one is, why is it doing this? Cathie Wood's ARK Fund, they exited GBTC and they bought into BITO. So QQQ, we saw this long-term kind of chart up here. GBTC, just so everyone is aware, and full disclosure, here it is in the 4-hour algo, and GBTC on the algo is up 80%. That was its first run. This is 85% on its second run. It's kind of getting that button hook. I probably would stay a little bit out of this, but I will talk about a little bit about what we're seeing with some of the Bitcoin ETF stuff. But GBTC, Cathie Wood selling out of this is no small thing. She had a tremendous position in this. Getting out of it, she did say, there was a quote in here that's interesting. ARK's generation for next, Cathie Wood's, I thought I saw a quote in here. I was doing a little bit of research, so maybe I saw it in another one. ARK sold GBTC shares out of an abundance of caution, Wood said in an interview on Bloomberg Television. We're still as optimistic about Bitcoin as we ever have been, she added. So they're just changing things. And remember, GBTC is the one that brought the lawsuit against the SEC to be able to change from a spot ETF to an actual real-time ticker symbol tracking Bitcoin. And there's differences in that. But GBTC, to be full disclosure, I sold out of this in December of this year. And since I sold out, it is up 320%. I got sick of the fees. I got sick of the expense. Maybe Cathie's kind of the same thing. This has just been on a tremendous run. Do I expect it to get back to 60? I don't know. I mean, BITO, if she's buying into BITO, she knows something that I don't. She is this is one smart lady. I mean, whatever you think about her performance, she is incredibly intelligent. But this is the ProShares Bitcoin ETF. Listen, it's not up as much as GBTC. GBTC has been the kingpin. And you look at this one from a weekly perspective. If we just go back here to December of this year, let's see, that's 2023, January. If we go back to the low here where I sold out of GBTC, which is about this point, and we just go up to this point, this one's only up 98%. So different calculations, different volumes, different kind of things. You might want to think about following Cathie Woods if you're interested in getting into this Bitcoin stuff. So there's an idea for you if you want to get into the Bitcoin stuff. BITO. BITO. I like that one. I don't know the difference. If you want to do just a difference of, hey, what is BITO? Go over here to Seeking Alpha. You can type it in and you can see, the momentum, A plus, expenses. So if you go over here to the expense portion of BITO, you can see 0.95. That's really expensive. Dividends, A plus. Let's see. Do they pay a dividend? Yeah, they do. 14.9%. That's kind of nice. Risk, F. From their ETF. Liquidity, A plus. This might be a really good, in fact, I may buy into this one. Let's look at it on the 4-hour. Let's run the algorithm on this because I know we had a recent buy on this one. Yeah. Ooh, $14. We're at 20. I mean, that could pose pretty well for this one. I like this one. I'm going to put this in my TrendSpider list of not owned. Yeah, I like that one. Not owned. Should I put it in? And if, by the way, if you're new to this is TrendSpider. This is my algorithm in TrendSpider, 4-hour algorithm. You can get it when you sign up for TrendSpider. Just use Linktree and use that top link right there. It's on sale. But going back to Seeking Alpha, I was looking at these top-rated ETF. Top-rated. I basically went down here and I went to top stocks, and it will rate the top quantum stocks. And this one, GCT, kind of jumped out at me as maybe an opportunity. Specifically, I was looking at this chart and I was saying, September 8th, it was selling up here at 16. You're kind of running into that. You're selling at about 18 right now, kind of getting a little bit of a pullback. But it's interesting because it's a buy from Seeking Alpha analysts, and they're all super, super high. The quant gives it, even its valuation is just a B. So if we go over here and we type in GTC and we look at it on the, GCT. I'm sorry. GCT. Type in GCT. Here on the 4-hour, we can look at it. The interesting thing about this in TrendSpider, and again, these two tools kind of work together. My 4-hour algorithm in GCT makes you 243%. Versus buying and holding 16 months ago when it was first IPO'd, it loses you 7%. So the current run of this one, you bought in here at 9, you're up at 17. The current run since the end of November, 91%. That's over 36 days. This is how the quant tries to help you. It tells you this, and then when you use TrendSpider on the back end of using Seeking Alpha, you can find some really good stocks. It's run a little bit. If we go over here and we use another tool that I use, which is FinViz, and we type in GCT, we can see it is making money. The PE is not crazy. It's 10.12. The forward PE is 7. The average target price is 19, and you're trading at 18. So it is running up there. It is up 216% year to date. The two price targets are from October 2022 and June 2023. So you can read articles why Giga Technology stocks is soaring higher this week. You can look. There's no insider selling, but all of these tools kind of lead me to believe maybe this is one I want to look at. Look, 39 cents per share, 45% per share, 59 cents per share. The RSI is a little high. Not totally worried about it. The MACD is a little bit high on that thing. I'd like to see it come down a little bit, but you do have confirmation. You're in the middle of a run. You just had a golden cross here. If we look at a weekly on this one, and we look at the long term, it's not that old that it doesn't even have a 200-day. But you can see here on the IPO, the period was during this week, August 15th, it was 151%. It opened at 19. It closed at 48. It got all the way up to 60. This is an $18 stock right now that on its IPO was at 60. It was overvalued, but look at those PEs. They're not crazy. I'd read up a little bit more about this, but I wanted to show you guys how I use Seeking Alpha, how I use TrendSpider, and how I use FinViz, and all of the tools that I use, because I will be putting out kind of a tools video, I think, at some point in time when I get lazy and get off my ass a little bit. But I like that. And this was a perfect example of how I use these tools to look at everything that I have in my portfolio, everything that I have that's coming up, all of that kind of stuff. So GCT, I may be buying that one as well. Again, two stocks right off the bat here. So BITO and GCT. Great observations if you're looking to make some money. Again, let's start 2024 off right. Social requests, if you didn't know, you can log into Spotify. If you listen on Spotify, just down below, you can type in whatever the hell you want. But you can ask me to look at a stock if you'd like. If you're listening on Apple Podcast, you can't really type in, but you can use any of the social networks. So I've got a private Facebook group. I've got Twitter. I've got Instagram. You can just ask me to look at anything. So we've got quite a few of the social requests right now. Alex from Spotify, can you please look at REFI, REFI? Bought some as a long-term play with its huge dividends. Have an awesome new year. Thank you so much for your podcast. Let's look at REFI. What the hell is REFI? Chicago Atlantic Real Estate Trust. You guys know how I feel about REITs. You use REITs for income. You don't use REITs for long-term investments because typically, now I'm just saying this, and again, douche on the internet right here. Douche on the internet. But it's got $291 million market cap, so it's semi-small, not super small, but billions of dollars. It's only got 17 million shares outstanding. Might be a little bit hard to fill if you're trying to fill it on a sell quickly because of a downturn, like you can see here. But it's got a 12% dividend. It's got a PE of 7, not crazy. Forward PE of 6. Real estate, anything real estate right now, you're probably reducing rates. You're going back up. So if we take a look at this, the algorithm had you in at 14.29. You've gotten the ex-dividend. That drop that you're seeing is that 12% dividend taken out. That's just the ex-dividend taken out. And we can look at, like we said, Costco. The dividend was taken out. You're trading at 661. I think it went right back up, but we'll take a look at that after this. But here's the REIT. You're up 21% on this one. Then you got your dividend. So now instead of being up 21%, if you bought in the algorithm, you're up 13%, but you got your nice dividend. You got your 4% dividend. My expectation is because this is on a run, because you just had the Golden Cross, you're probably good. Your RSI, people sold. What will happen is the dividend is taken out. People will start to see it sell. They will panic sell, or they will start to, buy it just because, oh my God, it's high. The RSI, the MACD is a little bit up there. You can see when it was up here, back here in June of this year, you just kind of went into a little bit of slide. I don't think there's anything in here that kind of causes me to say, okay, let's look at it over here. Say, hey, you shouldn't invest in this. I think the stock, from a standpoint of, we can chart it against the S&P. 1 year it's up 5%. Year to date you're up 8%. 5 years it doesn't even have a 5 year. So it's a little bit newer, it looks like. But year to date, 1 year you're up 5%. The S&P's up 26%. So you would have been better off buying VOO. Year to date, the S&P's up 25%. So again, real estate got unnecessarily hit this year. So I don't think it's a long-term play, Alex, but if you're looking for just to get some cash and to redeploy that cash, probably not a bad idea. Dex from Spotify wants me to look at Riot. This goes right along with the next one. I will look at this one. But Riot, this is Mara. I bought Mara. It's the same thing. Mara's got a little bit more crypto, kind of, not exclusivity, but Mara is the big boy. Riot's the small boy. So it's up 68% right now in this run. Like I said, January 10th, I think anything that's running into this Bitcoin ETF, I think you're going to see complete hype mode. Does it get back to 55? No. Does it get to 30? It might. You're just over the 200-day. You've got confirmation over that 200-day. Your MACD's just crossing up. Yeah, your RSI is run, but that's because you're up so much. It's not a horrible one. When you take a look at Riot over here in FinViz, they're not making money, just like GBTC and all. Or I'm sorry, Mara's not making money. This one has 206 million shares outstanding. Year to date, it's up 419%. The average target price is 1860. You're trading at 1780 right now. I don't think it's crazy to think that, hey, you could buy this. There's some insider selling at 15. There's some insider selling at 19. This is just one of those that you're kind of betting on. Between this and Mara, if we go over here to Riot, we can look at the some of the Seeking Alpha stores. Seeking Alpha is strong buy. Wall Street strong buy. Quant is a hold, and it's probably just because of their run. But let's select symbols and let's get rid of the S&P because we don't care about the S&P. But let's look at Mara. Let's look at GBTC. Let's just look at these three and let's look at the 1 year. Mara's up 793%. So either that one has to pull back or these other two have to come back up. Mara is just one that, and we'll go over this one in a little bit, but Mara is one that just defies all logic right now. Year to date, Mara is going crazy. 3 year, you can see Mara's up 129%. GBTC is up 14%. Riot's up 12%. So Mara is the king daddy. I don't think it's a bad idea to get into Riot. Just understand, you will deal with some extreme volatility on here. The 4-hour algorithm, so on Riot, makes you 2.5%. Now, if you held this for 24 months, if you bought and held, you're down 24%. So the algorithm protects you on this one. Doesn't necessarily make you a killing. It protects you. Oh, by the way, Bisco from Spotify said, the land of the lizards, which was the name of the other guy or person who asked about a stock a couple of days ago. Land of the lizards' name is a fish song. So, hey, kudos. Edibles are my go-to. I'm not a fish guy, but I completely respect the music, respect the community that they put together. Bisco also says, appreciate the pod. Now, Melissa in the Facebook group asked, is it too late to get into Mara? We just looked at Riot, and I don't think it's too late because I do think that you've had this run. Now, 2 days ago, I bought Mara at 26. And I said, I'm YOLOing this. I think I bought about 100 shares. I think I spent $2,600 on it. It wasn't a big position. I YOLO'd it. I said, hey, we just had this golden cross at 15. I've missed out on this run. I don't think that I've missed out on this one completely. I think it goes higher because I think the hype rally is real. Now, you had this gap here between 27 and about 27.86. And it came back down and it's filling it. My expectation is it continues. I said I was looking at buying at 26 and selling at 30. I can't sell this year for tax reasons because I bought it in my brokerage account. I plan to either add more or sell and take a profit when it hits 30. My guess is I'll just add more if it hits 30 before January 10th. I don't think it's too late to get into this one. Just realize your top is probably 40 to 50. It's probably going to settle into this range right here. I said at 30. This is where you saw the last kind of look right here. This line right here puts you in right about there. That line right there is about 31. So I expect some resistance at 31. The Bollinger Bands are just opening up. Your MACD is crossing up on the oscillator. The RSI is at 82. Understand, 2 weeks ago, this was trading at like $9. And I said to everybody, hey, under 10, you should get in. If you're playing crypto, you should get in. My algorithm on Mara makes you 63%. So rather on Riot making you 2%, this makes you 63%. If you bought and held, you had 31 positions over 24 months. You wound up losing in my algorithm. But if you just bought and held, you lose 15%. So I don't think it's too late. It is extended. It is expensive. Look at the price to sales of Riot at 13. The price to sales of Mara is almost double at 24. But everybody's trading Mara. And this one has 222 million shares outstanding. They're losing money. It's got a $6.2 billion market cap. The average target price is 13. And I repeat, it's trading at $29 right now in pre-market. So understand this is not one that you buy and hold and you forget about with a large position. If you're putting positions in this, if you're playing some type of options, futures options, or anything in this one, this will move a very long way. But Melissa, understand, number one rule, I am a douche on the internet. I don't think it's too late to get into this one. There might be better options out there. This article right here. Come on. We're going to go Marathon Digital Stock on track to break 11 session rally. And it did break. It went down yesterday. That's not a horrible thing. I think that extends the rally. From December 11th until the close of December 27th, the stock more than doubled. That is 16 freaking days. So this is one of those runs. Other Bitcoin miners have also made dramatic gains during this day, but they also took at least one breather in the process. For example, HUT surged at 105% since December 11th's close, but the stock lost ground on the 11th, 12th, and 19th sessions. Mara is the only one that hasn't. So while I think this one's a good one to get into, we can take a look at HUT. You can see right here, look at those red candles. The algorithm got you in HUT at $10.29. Right now, this one's only up 54%. So just understand there are plenty of names out there. Another one that you might want to look at, and another one that's a little more solid, Coinbase. This one has just been a monster. I'm going to get rid of these. Let's see, remove this segment. We're going to remove this segment. And we're going to say, okay, the algorithm gets you in to Coinbase here at 71, 77. And Coinbase is probably one of those stocks that you want to be Cathie Woods and you want to buy it. But over 58 days, the algorithm so far is up 144%, and you still have confirmation. It is crazy. This 93%, throw that out to trash. Understand this MACD is overextended. The RSI is at 75. Is it too late to get in? If we look at a weekly on Coinbase, you're still 149%. Let's see what it is today, because it's at less than 149. You're 102% from your all-time high. And that was back in November 2021. So you don't have a 200-day because the stock is still rather new. Here's your 50-day. It's moving positive. Everything's moving positive. The RSI is at 83. Understand the MACD is up where it hasn't been before. Coinbase is going to they're going to hold all the Bitcoin for all the ETFs. Cathie Woods has a ton of Coinbase. So if you don't want to get into these crypto ones, get into, I would suggest ARKW. I like ARKW a little bit better for this than ARKK. But ARKW, this one has been a monster too since the end of November. You're up 50%. But ARKW, if you look at the long term, you still have opportunity to get back to that 200-day. You haven't even touched the 200-day, which is 889. So your 50 days moving positive. You have confirmation. Just understand everything's extended. So I don't want you to back up the Brinks truck and load everything in there. You'd be crazy to do that. But I do like all of crypto until January 10th. And then January 10th, and I don't know how it trades between now and then, but I do think that Bitcoin ETF, one of two things will happen. Either everybody realizes that we're fully extended in the Bitcoin rally, and they just jump out and you're stuck holding a bag or trying to get rid of it if you bought in too high, or it continues its rally. And maybe on January 15th, we start to pull back, or January 30th, we start to pull back. So it's a little bit of a questionable play. I like it. I bought into it. I am not buying a ton more, but I probably will start to put in a couple of $1,000s each day from this point forward. Dex from Spotify asked me about Disney. So here's the deal with Disney. I like it here at 90, but it's expensive. It is still expensive. And the thing you have to understand about Disney, I still hold it, and I think I hold it with an average price of about 95 or so. So I'm still in the red, and it's in a retirement fund, but it's smaller positions. I think it's $1,000, $2,000, and $3,000. It's not a large position, but I'm trying to start that position and add to it over time. The PE is 70. The forward PE is 17. These guys have a business in ESPN, and their costs are still huge. So your costs are going up for all of the sports stuff that they're doing, for all of the streaming stuff that they're doing, and for buying Hulu. The costs for the parks are going up because of increased wages, because of increased costs, just inflation, blah, blah, blah. So all of their costs are going up. Meanwhile, their revenue is actually coming down. And the reason the revenue is coming down is you can think of your cable bundle at $100 a month, your TV service, say $70 a month. Well, $50 of that was probably going to Disney for sports and shit like that. They were making a tremendous amount of money. And as the cable bundle gets dwindled down and customers pay less and less, Disney's actually making less. And Charter this summer, they took ESPN off the basic tier, and they had a fight with ESPN over the actual dollar amount that they were paying. Well, Charter won, and Disney had to take less. So as these contracts come up, they're going to start taking less. And then they're going to launch a consumer ESPN business. Today, the consumer business is pretty crappy, to be honest with you. You get like lacrosse games. So if you're into lacrosse, if you're into cricket, if you're into other kind of international sports, it's pretty good. If you're into high school sports, it shows stuff like that. But for the majority of Americans, they don't want an ESPN thing. So you're taking 300 million Americans who used to get ESPN as part of their basic cable bundle, who had to pay for it, to people who will just choose to pay for it. And so that revenue comes down. In my mind, I just don't think this is a huge turnaround story back to a $400 stock or $120 stock. This is a long-term one. Do I think it's a buy? We can go and look at it in the algorithm. The algorithm right now got you out with a 2.67% loss. You can see this one had you an 11% gain. That was solid buying down here in the 80s. Now, I am not selling out of my $95 position. The Bollinger Bands are sinking. They're kind of expanding. You can see they cinched up. When Bollinger Bands cinch up like that, they're going to expand. And they're going to either expand on the way up or the way down. You take your moving averages and you look for confirmation. The confirmation is that Disney's moving down. And your 50 days moving down, your 9 days moving down, your 21 days moving down. I think this was just, hey, year end, we're going to pump this price up because some of the brokerage houses probably bought into Disney and needed to pump that one up. So they probably put a ton of money into play, got it pumped up. It will come back down here to either the 200-day or that $80 level, which seems to be providing some support. Scott in Facebook, he sent me a message. So Tom Lee said in a recent interview that he expects S&P to drop during the first 6 months of 2024. His projection is 4,300. What do you think? In order to look at the S&P, I'll look at SPY because the SPY is just, if he's expecting it to go down to 4,300, Tom Lee has been more right than wrong. That would put SPY down here to 430. And if we go down to 430, you can see that would be a 10% correction. That's not a crazy assumption that we get a 10% pullback after this, 15, 20%, 13% rally. It's not crazy to think about because when you look at the long term, we're going to continue higher. What he expects is the roller coaster of next year to actually happen. And he expects this 479.88, 98 to be kind of a tipping point where you kind of pull back. And he expects that double top to happen. And then you pull back down to 430, which is way down here, which you can see if we put in just 430. Let me get out of here. Oh, stop. I don't want that. We're going to hit escape and we're going to do this line. So we're going to go to 430 and put in that line here. This is a weekly chart of SPY. So we're going to go down to 430. That's right about here. Got it. And you can see that line right there, 430. I mean, do we get that pullback from to that point? Looks like that was the pullback where you started the downward trend, kind of provided some resistance on this candle, kind of provided support on this candle. So you can see, I don't think 430 is out of the realm of possibility. The MACD continues up. It can continue. It can roll over, and that strike line would continue up, and then you'd have to cross up. The RSI right now is at 69, so I think it's possible. Tom Lee has been more right than wrong. I don't play the market in that. He expects the first half to be soft, but he has also said he expects the second half to be just a rocket ship. Now, again, I point out Tom Lee has been more right than wrong, but these guys typically need to do and say things like that in order to get press coverage. So my assumption is Tom Lee is playing this fairly conservatively, because if we only pull back, in my mind, we probably get to 450, I would think would be a relatively safe pullback. And if we get there, load up the Brinks truck, because I think you could buy your way down through here and dollar cost your average way. But I think that's what I would play, Scott. I don't think I'd play and pull my stuff out of the market, because who's to say that Tom Lee's not wrong? I mean, again, he's been wrong other times. He's not right all the time. So I think you play it. I think you look at the charts. I think you continue to monitor your portfolio, and you adjust your stuff that way. TM, can you please do an episode on Shopify? I think it may be a good long-term stop. TM, you have not been listening to me for very long, because I've been going over Shopify pretty much on a weekly basis. I've said way back here when it was trading at 50, I said we're looking at an $80 stock by the end of the year. We're at 79.61. And the reason I said 80 was there was a nice little gap up here. If we pull this back, I think it may be on the weekly. But if we pull this back, let's see. Let's go to the weekly. Because we can look at the all-time stuff here. Yeah. I said it would. No, it wasn't even a gap. It was the freaking 200-day. Sitting there now at 82 in an upward trend. The 50 days now moving up. So I said at 50, you should feel very comfortable buying this one. But the reason people didn't feel comfortable buying it is because of the PE. They're losing money. Their forward PE is 76. It is incredibly expensive. I don't think it's a bad buy. I think here at 80, you've got your all-time highs back here at 160. That was November 2021 where we hit the highs. But you're going to see some resistance here at 80. If you're going to buy it long-term, just buy it here. Just buy it here. I have a 5-figure position in this one. That is a long-term. I bought some, I think, at this realm back here at 80. I've been holding on to it ever since. It slid down. I bought more. I bought more down here. I believe in this company. Remember what they did a few months ago? I think it might have been 6 months ago, was what they did. They were losing money. So they got rid of their fulfillment for their small to medium businesses. They sent that over to Amazon. Amazon's now got the cost center, whereas Shopify has the revenue and margin. So they're going to start making money again. You can see they were making 22 cents, then 8 cents, and then they started losing money. And as they got rid of that fulfillment center, they started making money again. They will make money. This is a great long-term stock. So I would suggest, if you want to go back and, history and listen to my episodes, I've been saying this whole ride down, you should be buying Shopify once it gains confirmation. When did it gain confirmation? Right here at 30 on the weekly. In October, the October lows of last year, it gained, hold on. Excuse me. It gained confirmation. Confirmation can be used very well. Hold on one second. Your boy still got a little bit of a cold. So I like Shopify. I hold it long term. Let's talk about scans. And if you don't know what scans are, I go into TrendSpider and I do a market scan based on my algorithm. And I look at several things. The watch list that I provide. I provide the core investments. I've got 36 names that I have. I scan my own brokerage. I scan covered call ETFs, the list that I provide you. Energy names that we trade. I scan that. I scan levered ETFs, low cost Vanguard. You get all of those lists included when you sign up for TrendSpider. If you just go over to Linktree, click on this, and then you email me. Once you sign up for TrendSpider, we can go in, we can look at the pricing of TrendSpider. You want the elite level. You want the middle level here. It is $397. It's good for 2 more days. So until the end of the year, you can get it for under $400. So you use the link tree, you sign up for TrendSpider, and then you come back here and you email me. Email me from the email address that you signed up for TrendSpider with. I will email you back, and I've got a few people from the past few days to email back. I will email you a letter that includes a welcome letter that includes a links to all of these lists so you can import them. But when I scan these lists. I scan my own personal list that I don't share. And then I scan the Dow, NASDAQ, and the S&P. And there are a few that come up here. Coke. We had this nice 7% gain. It got you out, got you right back in at 58.65. I said this is $60 stock. If you want to get in and just hold it until 60 and then sell it at 60, you're fine. Not a great thing, but this is a great long-term play. Who's in this one? Warren Buffett's big in Coke. SCO, and not the cocaine stuff. SCO, I've said, hey, wait for confirmation. Oil, there's just too much supply. And SCO is an ultra short. It's a 3 times leveraged short on oil, $20.35. If we go over here and we look at oil, oil is up 0.91%. It's trading at 72. I don't know that I'd buy heavily into SCO, but you could probably trade this on the 65-minute algorithm, which, by the way, trades on the 8-day EMA. And the 65-minute algorithm said buy at 19 and you're up at 20. Not a bad play on that one. But I'd probably trade that one. But on my 4-hour algorithm, SCO does get a cross up here. We can look at TSLS. This is the short of Tesla. Hold on one second. I'm going to stop recording real quick. My dog just got up and sat next to me. She has seizures, so I don't know if she's heading into a seizure or not. Hey, you okay? You okay? Do you want your blanket over here? Okay, hold on. Bring this over here. Come here. My other dog may have just annoyed her. Is it that you're annoyed with Penny? She just wanted to go over. Okay. Okay, I gotta hit record again. So Tesla, this is the short of Tesla, TSLS, and the algorithm got you in at 1845. So if you're thinking that Tesla is going to go down with all of the news coverage, people just be careful. I was in TSLQ. TSLQ is one also that is a short of, you can go and look at which one you want to do. But TSLQ got you in at 27.33. You're at 27.39. These are decaying assets. You want to trade them. You don't want to own them. PSQ also is a levered ETF. This is the short of QQQ. We talked about QQQ. You want to wait for this to have confirmation. Now, this gets you in at $9.44. If you want to short, I would suggest SQQQ, which is the Ultra Pro. This one got you in at 1336. You're at 1327. I said wait for confirmation. You still don't have confirmation. On this one, you're just kind of hovering around this $13 mark. The MACD is very low. The RSI, it is oversold. So buyers will need to show up. They're at 30 right now. This could be an opportunity, but I say don't buy these unless you have confirmation. When you have confirmation, you can see 1918 right here. Got you out with a 0.5% gain, but you got all the way up to 23. It's a nice 20% gain. So PSQ is one that got up. Now, one sector that's been beaten up It has a cross up right now, is XLU. This is utilities. Got you out with a 1.14% gain. If you're just looking for entries into this, 63.43. If we look at a long term of utilities, you can see it's trading in this range. And I put this thing up here. This is a 35% range. You just did have the death cross, so you don't really have confirmation. If you're into utilities, this is one. Again, utilities are used mainly for income, kind of like REITs. So with bond rates higher, they just haven't performed really well. WIN, this is one that has been beaten up, just got back to its 200-day. 84.02, you're seeing a cross-up high up here on the MACD. The RSI is at 63. If you want to get in, it's got confirmation. This is just another, you can see the Bollinger Band cinching up. When the MACD crosses up, this could mean that you're going up to a second leg up here to 95, 96, but WIN crossed up. I had one that crossed up, and I wanted to bring up, this is in my personal buy list, it's Best Buy. I've always been a fan of Best Buy. Recently, I just didn't like them. I liked just ordering on Amazon, and it made it easy, and the Best Buy stores were kind of bad, and the app was horrible, and the pickup was just, really crappy, the service. I had a fantastic buying experience using the app and buying 2 new iPhones from my parents. The fulfillment process, the actual order process, the communication process, everything. I ordered Christmas Eve. The store was closed. It was like 8 o'clock, 9 o'clock at night. I ordered Christmas Eve. They were closed Christmas Day. But at 8:30 a.m., I got an email that my order was ready. I rushed out of the house. I did the podcast the day after Christmas. I rushed out of the house. I get over there. It alerted me on my phone, your orders are inside. When I got inside, they knew I was there. They had the phones at the counter. It was a 5-minute pickup. It was absolutely fantastic. I am a big fan of this one now. It's just getting back to it. It's got another cross up. So when I talk about my algorithm and cross-ups, you can see the buy here was 65. Going into Christmas, we had next dividend date, took some money out. It continued down. It's continuing back up. The Bollinger Bands are cinching up. You have confirmation. So my guess is that this gets a little bit higher. If we want to take a long term of this one, it's trading at 78. You're not even at the 200-day. So if that 50-day is going to actually turn around and start moving positive with the 9 and the 21, you probably have 91 in this stock and you're trading at 78. It's not a crazy thing to think that this one could do actually well. The PE is not nuts. It's 13. The dividend is 4.65. You're down 1.77. I actually liked the store experience. It's one to think about. Which is Realty. We talked about the REIT from Alex, who asked about, which one was it? Refi. This one is one of the largest realty income. You had the Golden Cross, and we had another cross up. So it got a nice cross up. There's a couple more that I will include in the newsletter. If you have any questions, hit me up. Market's now open. Have a again, my paid newsletter tomorrow is going to be some predictions. If you want to sign up, I completely appreciate everybody that pays for the newsletter. I hope I provide you content. I know I started it 6 months ago, and everybody that has paid for it has enjoyed it. I haven't gotten one negative feedback yet. So I really like it. I like doing it. It helps me keep on track. If you guys have any suggestions, if you're a paid member and you want to suggest, hey, I'd like you to write about this, tell me what you want me to write about. The biggest thing that you can do is I think the tools that I actually think you should get and start off your 2024 with. The first one's TrendSpider, and that's making sure that you have a large enough portfolio to trade in to justify the $400. The second one is Seeking Alpha. I think that those two complement each other well. And I think the third one would be the paid newsletter. Because I think both, when I use those tools and you're using those tools, you can find a system that actually benefits you. We've had plenty of people write to me over the past couple of months as we started looking at the end of the year that they were beating QQQ, that they were beating the indices, that they were doing really well. And this was the first year that they were actually doing that. So I think there's opportunities with using these tools that you could actually, trade your way into a pretty good 2024. And if we are fluctuating like Tom Lee says we will, if we fluctuate that much, like Tom Lee says, this algorithm will help get you out of positions that you don't want to be in. Look at this. Apple, you're out with a 12.95% gain. That, if you just wanted to trade Apple, this algorithm makes you 32% versus buying and holding over 24 months. It makes you 8%. Now, Jason's got an even better algorithm for Apple. I don't think I have it saved, actually. I don't think I do. No, I guess I don't have it saved. But Jason, I did a strategy session with Jason from TrendSpider, and he's got a great algorithm that just blows away everything. But, again, my algorithm would protect you in that fluctuation if you listen to it. And that's the thing is, remember, this is just charts. Takes emotions out of the trade. You still have emotions because you have to hit the buy and sell button. But I think those three tools, the TrendSpider, the Seeking Alpha, and my paid newsletter. The other thing you can do, start 2024 off with $1,000 in Webull, like I did. My $1,000 in Webull is now, let's see, $3,740. So I was hoping to be at $4,000 by the end of the year. I'm not. That's without trading options. I probably will use that money to trade options in the new year. So, okay. If you have any questions, hit me up. Have a great New Year's. Again, if you guys want to hit me up on any of the socials, I'm back in Atlanta, so I should be available. Anybody that I didn't get to, I will get to. Okay, thanks. See you. Bye. Okay. VRO coin. Coin's amazing. BT. Oh, that's the other ETF, I think. Bit Digital. Or no, that's a... Oof, look at that one. My God. Phew, that's huge. HYMC. Is that the other miner? Yeah. That's another miner. Yeah, I think everything crypto's going nuts. MPW. I mean, some of the REITs, like Sherry, I think had MPW. I think you were buying at like the $5 range. I think they're solid. The problem you have is that we don't know. I mean, they don't release a lot of information. So even on their earnings, they're asked about stuff and they just, I mean, it's an 18% dividend, MPW. It's down 54%. Their forward PE is not crazy. The price to sales is 2.19. Not horrible. The average target price is $6.70, and it's at $5. So I think you're right. I think it's opportunities. For me, it just doesn't excite me. And so I typically want to look at things that excite me. Look at how the dividend came out of Costco, and we lost confirmation. Algorithm still has you in, probably will get you out. But the button hook was forming. You got a gap down here at 635. That's probably where I would start adding if I don't have a position currently. But you can see this purple line is what TrendSpider's expectation, their own algorithm, expects it to go. I think that's what that line is. Look at that. Such a nice tool. Okay, let me go grab my... I had to grab my laptop pen. I think my poor little puppy's sick. Oh, let's see. Do I have battery life? I do. Sweet. Okay, and let's go over here. I'm going to close that. move to trash. And then we're going to move this to trash. And I got a little bit of editing to do because my dog got sick. But we're going to take those two. We're going to share. MacBook Pro. Okay. And let me go back to your comments. Wah, wah. Okay, waiting for that to go through. God, I hope it goes through. Let's see. That little shit. That little shit went upstairs, opened up some doors, and came right back down. There's a ringing going on. Morning, Zephin. That halving does worry me a little bit. But I don't know enough about it, Christian. Thoughts on CELH? Let's see. This is Celsius? Yeah. I don't know them too well. But you're just getting back to the 200-day. The gaps below have been filled. High PE. I think I did this one previously for somebody. And I said the PE is what worries me. Because specifically in drinks, the target price is 70 and it's trading at 54. It's up 57%. The most recent one is price target change, $217. I mean, do they really think this is going from 50 to 217? Let me see. One growth stock to buy down right now. This is an interesting one, Sherry, if you want to read it. I'll send it out here. Their earnings are going up. But drinks are so fickle. Yeah, and this is high-flying growth stocks are often expensive because the market is pricing in future success. If the price gets too high, investors run the risk of the company under-delivering and getting punished when the stock reacts accordingly. There's no question that Celsius commands a hefty price tag, but thanks to its recent drop, it's not pricing in so much success that investors need perfection. I would say with a forward PE of 57, it's for a drink company, it's pricing in pretty good perfection. Your 52-week range is, you're 104% above that, 20% below your 52-week high. I don't think it's horrible. The insiders, they're selling at, that's $8 million selling at 51. That's a director. CEO sold 700. The CEO just sold $15 million worth. But again, I don't want to talk you out of, if you drink Celsius or you like the product, it's kind of like me with Best Buy. Somebody may tell me, do not buy Best Buy. Amazon's taking their lunch and they're just a horrible business, blah, blah, blah. And I didn't have a good experience. I had a good experience. This makes me want to buy Best Buy. So I think Celsius is kind of in the same territory. Oh, hold on 1 second. Are you okay? Is she come here? Come on. What's wrong? Okay. I don't think you feel well. We have to get some water in you. I have to go get some bread. Okay. I'm watching my dog. I think I've got to go take care of her and edit this stuff. I need some bread to get some water in her. Because I haven't seen her drink water, and she's had some diarrhea. So, fun times of being a dog owner. My portfolio is probably down because Apple's down. UNH, good sale. I sold up here $550. I think we're on our way back up. $523. Okay. I'm out of here. You guys have a great New Year's. I may come on over the weekend just to do some cleanup stuff. I want new graphics in the new year, so I may do some cleanup stuff on OBS and test it with streaming. So if you want to be a part of that, just hit the alert button. Yeah, look at UNH. Getting that MACD cross up, getting that move going from 523 to 526. Happy New Year, Chris. Happy New Year, everybody. Have a great, safe, do not drink and drive. VRO, do not put Red Bull and vodka intravenously. Red Bull all day. I've never had a Red Bull. I don't think I could take Red Bull. I'd be one of those people who dies drinking that caffeinated lemonade from Panera. This gap was never filled.